Ladies and gentlemen, good evening. It's a pleasure to be here. I would like to say a few words before we will begin, because I would like to, before I will pass the word to Albert Deberach, CEO of Komerční banka, I would like to say a few words about today's evening and the Prague Summer Program on International Business Transactions, which is actually the reason why we are meeting here. And I'm very happy that all of the speakers today accepted the invitation, because we do have a very rare composition which will be introduced later to you. But the Prague Summer Program itself, it's a project which was created basically 1 year ago, and it is here to build a bridge between Central and Eastern Europe and China. And it's basically the biggest event such as this in the whole Central and Eastern Europe. There is nothing bigger. We do have this year 60 students from China coming here, and they are trained by the best leaders in business as well as legal environment in the Czech Republic. And as you can see them here, I think that you will have a lot of opportunities to be speaking with them after the meeting. But before we'll get there and the catering, we do have the main part of today's program, and those will be speakers. And because we do have such a rare personality, Mr. Deberach, I would like to pass the word first to you, so you can welcome all the guests today. So please, if you be so kind.
So, ladies and gentlemen, distinguished guests, it's my pleasure to welcome you in the premises of Komerční banka on the occasion of a banking panel discussion organized as a part of Prague Summer School on international business transactions. I'm very glad that the second year of this summer school includes a view on the banking area and its international, or as said the title of this discussion, transnational regulation. And I have the occasion to welcome in Komerční banka the speakers of tonight's event, Mr. Armstrong from China Banking Regulatory Commission, Mr. Tomšik from Czech National Bank, Mr. Lukács from Mastercard Europe, and Mr. Ustak from the law firm BBH. Komerční banka will be represented by Mr. Baleška, our corporate secretary. What we live today, not only in businesses, including banking, but also in our everyday lives, is exceptional. We are crossing the borders and connecting with each other as never before. It brings us a lot of opportunities, challenges, and risks. More than ever, the importance of communication and understanding is growing. All of us, and especially those who are young students today, needs to think above the national level. Working for international firms as well as international banks become more and more challenging. And I'm glad that Komerční banka can be helpful in the transfer of knowledge and experience that the participants received during the summer school from many top professionals. A lot has been said and written about the cooperation and business opportunities linked with China. We, I mean bankers, look at the Chinese bank with a bit of envy, because they are representing 30% of the global profit of our industry in the world. This evening is dedicated to one of the conditions of its international cooperation banking area, its regulation. It's not always the preferred topic, but it's the condition of financial stability around the world. It's key to ensure stability, security in the financing of the economy, as in the asset deposit management. After the last crisis, the regulations are still reinforcing a lot, strongly, and I'm pretty sure that you'll receive a lot of illustration on this movement this evening. Nevertheless, I hope that we'll speak also about the risky situation caused by unregulated actors practicing banking business without any license, any capital requirement, and very often without any skilled people. Everybody is knowing the word shadow banking. It's not a characteristic of China only. I could mention one activity in Czech Republic which is in this category. I can also mention the famous electronic money, Bitcoin. And I'm on this side quite surprised to see that the regulator seems passive to regulate Bitcoins. But at the end, I think that we'll have some nightmare about this initiative. So my single message to the regulators this evening will be, we need you for better, stronger regulation, but don't forget that you are also in charge to ensure fair competition on the playing field. So I'm pretty sure that we'll have an interesting exchange this evening. Enjoy it, and I'm letting the floor to Mr. Hu to share the meeting. Thank you very much.
Thank you very much for your kind words. And to save as much as time, to save as much as possible of the time, I would like to pass the word as soon as possible, but there is one last remaining thing which is very important. And those are things which are going to Komerční banka and the law firm BBH, which is a law firm located in the Czech Republic doing a lot of banking work. Mr. Zdeněk Husták will be representing BBH during the panel discussion. So the huge thanks on behalf of the Prague Summer School goes to both of these partners, which are partners of this event. And now I would like to pass the word to Mr. Husták. So please take a role and enjoy the panel discussion today. Thank you very much.
Good evening, ladies and gentlemen. I would like to thank organizers of the event for inviting me and giving me a challenging task to moderate this discussion with such distinguished panelists who agreed to participate in this panel. First, to introduce the panelists, Mr. Sean Armstrong, who is Deputy Director of Banking Innovation Supervisory Department at the China Banking Regulatory Commission. He has extensive background in the regulation of financial markets, and he's also a professor in law school at Tsinghua University in China. He will focus in his presentation on one specific trend which is common to a number of markets or all financial markets in the world. It is shadow banking. Next speaker is Mr. Vladimír Tomšík, who is Vice Governor of the Czech National Bank, the institution which is in charge of supervising all financial market in the Czech Republic. It is in charge of regulation banks, insurance companies, capital market, etc. He represents also Czech National Bank in a number of international institutions such as Basel Committee for Banking Supervision. Mr. Tomšík will focus in his intervention on challenges for small and emerging markets while transposing or implementing Basel III framework. Next speaker, Mr. Petr Palečka, representing the host institution, will provide the view of a commercial banker on the current wave of new regulation and the challenges the bankers do face in their day-to-day business. Mr. Palečka has also extensive background in banking. He has also long experience with international institution while he represented Czech Republic, the World Trade Organization and GATT in 1990s. And last but not least, Mr. Miroslav Lukeš, representing MasterCard Czech Republic, the major provider of payment framework and utilities for financial institutions. Everybody in this room uses at the end of the day their services. He has also long experience and track record from the financial services. My name is Zdeněk Usták. I work with the Czech law firm BBH. My background is I've got a couple of years of experience from supervising capital market in Czech Republic, and also had a track record of policy advice on financial markets while advising to Ministry of Finance. Now moving to our panel, the regulation of financial market has been very high on the political agenda for years. Since 2007, when the financial crisis filled the first pages of newspapers, we are nearly every day confronted with new issues related to financial institutions, not only banks, new proposals for various sorts of regulation and measures. And it is interesting to follow the developments on the market and the reactions of the institutions on one side and the supervisors on the other side. Just to mention briefly the recent regulatory initiatives, for example, at the G20 level, the initiatives focus 4 areas like the stability of financial institutions, promoting resilience of banks and other financial institutions, limiting the too big to fail paradigm, regulating or increasing transparency of derivative markets, and last but not least, the shadow banking sector, which might be viewed also, and the increase of the shadow banking sector might be viewed as an unintended consequence of new regulation in some aspects. The European Union, the Czech Republic, belongs to, reacts to these regulatory trends and initiatives in its own way, and sometimes the measures are even more going sometimes to the extent which at the global level hasn't been even proposed. But to give the floor to speakers, to panelists to provide you with their views, I would like to pass the floor to Mr. Shen Armstrong, who will focus in his presentation on shadow banking in China.
Good evening, everybody. It's my second time to Prague, which impressed me very deeply. We have a very good relationship with the Central Bank of Czech Republic, the National Bank, and we have some cooperation on the Basel Committee, and I think the governor today is very familiar with my colleagues who are in charge of the Basel Committee affairs. So today's topic for me is about the shadow banking. I think it's from China's perspective. As you know, the shadow banking is a universal topic today, and many of you may get the news that in China, the shadow banking has some problems already. You could find some non-performing loans happening. You could find some non-banking activities are very active. So today I would like to share with you our understanding of the banking and our judgment about the situation of shadow banking in China. Come back to the shadow banking definition. I think the most authoritative definition is from the Financial Stability Board, which have a very clear definition of the shadow banking. And I think this definition has been widely discussed between the regulators, the central bankers, as well as between the banking authority and the markets. So how about China's situation? You could see that we also have some definition of the shadow banking, but China shadow banking are created or derived from the traditional banking or commercial banking. In China, the main financial sector are controlled by the commercial banking, not by the investment banking, not by the insurance companies. The banking sector's assets account for about 90% the whole financial assets in mainland China. So we could see in US or UK, I can say they all have the shared banking, but the shared banking in these developed markets are mainly related to the securitization products. So I made a judgment that shared banking in China is a supplement of the traditional banking. What's the advantages or disadvantages of shadow banking? Since today, when we mention this definition, all of the comments, nearly all of the comments are very negative. So if someone discuss with you the shadow banking, this person must feel very serious about the result of shadow banking, since it may create some problems. But we separate the shadow banking as different perspectives. Firstly, I think shadow banking, at least in China, also have some positive functions. For example, traditionally, our investment channels are very limited, but the shadow banking enlarged the investment approaches. Secondly, in China, we separate the economy into real economy and the financial sector. So that's China's specialized definition. We think the shadow banking also serve for the real economy, for the industry, for the manufacturing industry, for the services, for the agriculture. We take this kind of sector as a real economy. Problems. Objectively speaking, it has problems. You can see that if shadow banking are not transparent or not very transparent, it will be out of the control of the financial regulators. And it will create the liquidity risks and threaten the financial stability. I think every central bank and every financial regulator's aim is to keep the stability of the financial sector. So actually, sometimes in China, we prefer to adjust the economic structure. As you know, formerly we seriously relies on the export, seriously relies on the manufacturing industry. But this kind of industry created pollution and more cost it's a heavy burden for the whole society. So in terms of this kind of negative characteristics of shared banking, we have to take some measures to control the situation. In China, as the banking regulator, we regulate two kinds of financial institutions. The majority is the commercial banks, and the non-financial or non-banking financial institutions is also under our supervision, which includes the trust companies, the commercial loan companies, and the financial leasing company. The pawn shop is under the supervision of Ministry of Commerce. Today, one of the officials from the Ministry of Commerce of China also present. Mr. Jia is here. So you can see for these non-financial institutions, we also have some supervision responsibilities. So our aim is to strengthen this the commercial banking as well as the non-banking financial institutions supervision. Transparency is a good thing for maybe for every sector, especially for the financial sector. You see, in China, we have different state departments in charge of the financial supervision. Even for the central bank in China also have some jurisdictions or responsibilities for the financial supervision. Although we were separated 10 years ago to be an independent regulator. The second regulator is securities regulator, China Securities Regulatory Commission. And there is another insurance regulator as well. The Ministry of Finance also have some responsibility on the whole financial sector's stability. So we have a coordination mechanism which operated from last year. Is under the central bank is the main coordinator of this mechanism. Local government, you see, when we mention shadow banking, the local government financial vehicles is also belong to the definition. So many foreigners are very serious, always seriously ask me the situation of the local government financial vehicles. The local government borrow money from the banking sector through this kind of companies or this kind of subsidiaries. So we know if we have to cure the problems of the shared banking, we must coordinate with the local government. The regulation on the shared banking in China, you see, we know first and most important job for the commercial banks is the management, the wealth management products. Some of the commercial banks just have a very big pool of the wealth management products. So from this year, we forced them to separate the wealth management business into a special sector of the commercial bank. Trust company, we have a new regulation this year for the trust company to also limit the wealth management products. Especially, we have some limitation for the trust company to invest in the non-standard financial assets. Non-standard financial assets mean the assets not traded in the interbank market and the stock exchange. Isolation maybe is a effective way. You see, we all know the definition of China Wall. So I think to cure the shadow banking problems in China, we have to build up some China Wall, which includes the following points. Especially for the banks, we do not prefer to see the defaults of the majority of the banks. So we have some regulation to forbid the banks to accept the credit guarantees from other banks or other financial institutions. And the microfinance is very popular in China. They are small and but very active. They could enjoy the high interest rates when they offer loans to their consumers. But we also issued some regulation on these microfinance companies. The coordination between the regulators and the central bank and the local government, I already introduced just now. I think the most important thing maybe is to remove the limitation on the interest rates. You know, in China, we formally control the deposit rates as well as the loan rates. So we try to limit this, try to remove these limits. I think the central bank governor already have a timetable for how should we remove this, how long we should remove these caps, especially for the deposits. The compliance, I think China banks, not like the Western banks, traditionally they are very compliant, but today they became more and more complicated, and the compliance also enjoys the priority for the banking sector. So we could see more measures on the compliance for the commercial banks. So for the students here, maybe if you have interest to work for banks in China in future, the compliance officer is a very good choice. So you have no market burden, you see? You have no, you are very authoritative and very well paid, especially when we punish the bank very seriously. So that's all. Thank you very much.
Thank you very much for an excellent presentation on recent developments on Chinese market. There are a couple of points which are definitely reflected or resembling certain developments in other jurisdictions like the European Union. Now I will pass on to floor to Mr. Vladimír Tomšík, central banker, representing the views on Basel III and challenges, Basel III and challenges for emerging and small markets.
Thank you. So, Mr. Lederach and ladies and gentlemen, thank you very much for inviting me. I am very pleased to be here. And why I've chosen the topic like unintended consequences and challenges of new regulatory framework to the small emerging markets. Why? Because I mean, the title of the panel discussion, as it was already announced, it's Transnational Banking Regulation. So, and I was thinking what kind of topic can be, I would say, interesting for both parties. I mean, for Czech Republic as well as for people from China. And it seems to me that new regulation, which has been accomplished or was accomplished like 2 years ago, Basel III, I think this new regulation is definitely going to be applied to the whole world, because originally it was designed just for really big international active banks. But nevertheless, if you want to really something to comply with international benchmarks, so even the smaller countries and emerging countries and smaller banks, they would like to use some, I would say, issues coming from Basel III and implement it in their structure. So it seems to me it doesn't matter if you operate in China or even Czech Republic, most banks would like to comply and most supervisors would like to require to implement some new international standards which are, I would say, which were accomplished by Basel III. So I'm very pleased to present you some of the latest work which was underdone especially by the Basel Consultative Group, which I am a member on behalf of the Czech National Bank. And probably it was not just an accident that I was also asked by Basel Consultative Group to chair work stream on this issue, because we are a small country and someone could say that we are already advanced country. But on the other hand, if you look at the classification provided by the International Monetary Fund, Czech National Bank is still emerging country. This is very important, by the way. So that's why, well, Czech Republic fits to both criteria, like emerging market as well as small country. And I was asked to really run this international work on this issue, especially on the intended and unintended consequences coming from this new regulation. And I'm very pleased to present you these findings and to discuss these findings. I think I was told to have presentations like about maximum 20 minutes, so I prepared just 17 slides. I will try to go very quickly through all the slides, but definitely you can download the presentations tomorrow from our website. So the first questions, what I would like to address is, do we really need a regulation? And as I said, the panel is about the transnational banking regulation. And I would say definitely we need regulation. And Mr. Drag already said, probably we need better regulation and more stronger. It doesn't mean we need, more regulation, but definitely it means to have more understandable regulation, better regulation, which can deliver probably the same level playing for all players. Why I'm saying that? Because I'm pretty sure banking business is a special business, because you deal with promises. On one hand, you do have money from someone else, it's not your money, and you use this money just to invest somewhere else. And you just promise to deliver interest rates in 1 month, 2 months, in 1 year. So definitely, if it's not your money, if you do business with if not your money, we need some regulation on that. So there is no, regarding my personal view, is there is no doubt on that. And why we need it? Because it's something else. You really see very, very huge potential contagion effect, which you can see in this picture. Well, I remember that a few years ago, when there was a problem in the United States, some people, even some policymakers said, well, it wouldn't be a problem because, it's far away, it's the United States. But always, the market, the whole world market is really very much connected. And capital, there is almost no, I would say, barriers. It's really free movement of capital. And it's always a question, there is something wrong, and if there is no trust, there is a significant, we can call it as a domino effect or potential effect, contagion effect. So definitely it seems to me that regulation can get rid of it, but at least can help to mitigate it, can help to build up some, I would say, barriers to mitigate it. So let me come back. And another very special thing is why we need a regulation is that you don't trade just with regular goods. You really trade with something, what is something as a store of value. If we lose, store of value, you lose just imagine you are going to lose all deposits that you have right now. The economy definitely will fail immediately. So it seems to me it makes sense to regulate it. But what kind of regulation we need? And by the way, there is an economic theory which says, well, definitely try to do best to use regulation which really, I would say, put under control at least, mitigate some moral hazard. Because, there is a moral hazard, especially if you use money which are fully covered by depository insurance guarantee scheme. Because on one hand, you collect, money from public, you know that all this money is fully covered by depository guarantee scheme, and now you just invest wherever you want. So, but what kind of regulation I'm talking about, and especially I'm talking about the regulation which is going to reduce this moral hazard, and there are at least two of them, the capital requirements and liquidity requirements. And why I'm saying that? Because both those requirements have been probably, I would say, improved or even embedded in new international regulation, which is Basel III. Because if you look at Basel II, Basel 2.5, there was nothing regarding the liquidity regulation. But new Basel III really brings it, in a real life and look at it as a absolutely, I would say, at the same level as the capital requirements. Regarding the others, I will leave it for the discussions where it makes sense to have some regulation which increase moral hazard or is quite ambiguous to moral hazard. So, what are the basic goals of this, I would say, Basel work, Basel framework? First of all, I think once the whole heads of supervisors from G20 agreed on this, because Basel committee consists of like 35 representatives, G20 plus some other important countries, and mostly and plus some international bodies like the IMF, I think European Commission, etc. So once these heads agreed on that, let's promote this agreement, let's promote this new regulation. But at the same time, always try to think about some unintended consequences. And there are, because as I said, the regulation was agreed about the leaders of the countries. And Czech Republic, we are a small country, definitely, we were not involved in that. We were just informed indirectly as a Basel consultative group. We provide inputs and we share ideas, but we don't decide on that. We are not members of that. We are members of the other, working groups. And why we shall really, promote these intended consequences? Because I fully agree, let's make the whole banking system more robust, more stable, and to really promote trust in the banking system. Why? As I said, it's a business with promises. Why I'm talking about smaller and emerging countries, and if you look at China, and the same with the Czech Republic, you really see some very, I would say, common features. The first of all, that Czech Republic as well, like, I mean, China, there is still a huge, I would say, future possibilities for catching up process. Definitely, the Czech economy hasn't finished its catching up process, its convergence process. And the same, I think we can say for Chinese market, definitely. Regarding the credit growth, someone could say that, I mean, credit growth in the Czech Republic, if it were like 15%, 20% year on year, it would be too much. But I mean, the financial intermediation in the Czech Republic is still definitely lower than comparing to Germany, to Luxembourg. And the same holds for China. It's regarding, we have to look what is the really benchmark, what is the comparative level for that. Well, markets like in Czech Republic and China, they are more volatile. We do have a lower credit ratings regarding the whole, I mean, economy, the whole state. And regarding homeless issues, I think that even we also see some common features for all emerging markets that, for example, if we have the very low financial intermediation, we need to attract foreign investors, especially in the banking system. Why? Because they can provide more liquidity, they can provide more foreign money, etc. But at the same time, it creates a problem with homeless issue regulation. And at the same time, it can trigger some problems like too big to fail, because if there is a really big foreign investor investing in banking system, usually at the same time, it creates something as a domestic important bank for that. And it can be too big, too much important, that if there is something wrong, there is no any authority which will have any enough power to close it if it's necessary. So I'll be talking about all these issues. Nevertheless, let me focus on 3 of them, because I do have just like, as I said, maximum 15, 20 minutes. And the most important, 10 minutes left. I think that's fine. You know, the slide is number 8. Yeah, 6. I will be speed up. Regarding capital. Yeah, this is not a surprising information that Basel III requires more capital and with better quality. That's fair enough, that's fine. But what kind of impacts we can expect regarding the Czech economy and Chinese economy? I think that the question is what it means regarding with the interaction with new capital framework, with new capital requirements, and the previous one or the other ones like Pillar 2 add-ons capital. Or at the same time, you require more capital with better quality, and you also require new regulations coming for liquidity, for example, pillars liquidity requirements. So you have to think what kind of consequences will create this new regulation once commercial bank has to meet all criteria at the same time. I know there is a phase-in period, but on the other hand, some banks, they try to, I would say, embark on this new regulation as soon as possible because they want to see it as a competitive advantage. But this is the question whether if you put too much new regulation at the same time with different pillars, with different capitals, how it will affect the real economy. Deferred tax assets, it's very important because you probably know that emerging markets, small countries, not all of them, they're not using, international standards regarding the auditing system, regarding the financial accountancy system, etc. And this is a very important issue regarding the Basel III, by the way. You see some impacts so far. The emerging markets, it seems to us that they don't have a significant problem. There are some countries, especially in Latin America, probably they will be affected with this new capital regulation. So I'm happy that China as well, Czech Republic, they are not in this group. Regarding the capital, just probably one very important, consequence is as follows, that, well, new capital, we need new, better capital, higher capital. Does it mean that you really need to issue new capital? Because some of the banks, they are trying to implement, we call it as an internal rating based approach, on one hand, I fully support it, because if you have this internal IRB approach, you are better to assess the risk in your special business model, in your commercial bank. But on the other hand, if it's too complicated, and if regulator or the supervisor doesn't understand it, and if it's prepared just to play game with risk-weighted assets, well, in the final stage, what we see, well, you don't need to increase capital, you just play with the risk-weighted assets. The unintended consequences as follow, that there is no need for new capital, but we need to understand completely new IRB models, new IRB approach. So if someone wants to really run for new regulation, well, I think not only the commercial banks, but as well as regulators and supervisors, they have to be aware, they really understand what's behind the IRB approach, what's behind the regulations, and whether the new regulation is able to capture all risk embedded in the financial institutions. And this is very, very difficult in emerging markets, because they do have a problem to really find a very good, trained staff for evaluating IRB approaches. So, and as probably you can even see some decline in consistency and understanding of a real IRB approach and real new regulation. Finally, regarding the capital, new regulation is coming with absolutely new macroprudential tools, and countercyclical buffer is one of them. On one hand, it's fine, because now central banks, the supervisors, it seems to us they are not responsible only for monetary policy, for price stability, but as well as for financial stability. So you are going to have two goals: price stability as well as financial stability. It means you need at least two tools. We do have interest rates, maybe FX interventions in the case of Czech Republic, but what about the macroprudential stability? And this countercyclical buffer, it's new, we are going to use it, but what is really written in red is don't use it too mechanically. There is a very simple methodology provided by Basel Committee that all countries should look at the variable which is credit to GDP gap, and if it's too high, it seems to me that if the economy is really overheated, just introduce this new buffer, put new capital buffers on commercial banks. Well, they will not be allowed to pump too much money in the real economy, and probably the economy will be going to the soft landing. But it's nice theory. In real, you make sure you understand the methodology. Credit to GDP, if it's too mechanically, it doesn't hold for Czech Republic. Why? Because, if you use a very long sample, you would calculate, banking crisis in 90s, you would calculate some bad banks, credit unions, whatever. So please understand your methodology coming from new regulation and implement it case by case. And the same holds for China, I'm pretty sure, because if I look at the financial intermediation, well, the credit to GDP, don't use it very mechanically. Regarding the liquidity, what I want to say, on one hand, it's nice to have this new regulation. On the other hand, what I'm afraid, coming from this new regulation, what is really highly liquid assets? So far, it was always government bond. And does it mean that we are creating some incentives to invest only in government bonds? I'm not very pleased with this regulation. Look what happened in Argentina. Look what happened in Greece, etc. So, and if we provide incentives to invest in government bonds, well, I'm afraid we provide some incentives for credit out of private sector. So always think about all this issue, and we have to, as a Basel Consultative Group and Basel Committee, we really have to work on that. Well, and the same, if you say, please invest as much as you can in highly liquid assets, probably you create a risk regarding concentration. DSIP, what is it, as I said? In emerging markets, and in China the same, if you have some really big banks, definitely, which are very important, because you do have several, I would say, variables how to measure it. You should deal with the problem like DSIB, domestic systematically important bank. But does it mean that you should just label those banks to the public? They are very important. We will never ever let them fail. If you say that, well, you create a moral hazard. This is something what I wanted to avoid at the beginning of the presentations. There is only one way how you can solve this problem. And it seems to me it's just to put in place a real recovery and resolution plans to make sure there is no institutions too big to fail. You always need to know what to do with this institution. Time is over. All right, so there are some recommendations regarding for all small countries and emerging markets regarding the new regulation. Well, I can talk about it like for several hours, but let me provide you with a really few basic, I would say, ideas. And I'm going to say, well, always think about how this regulation will interact with previous one, with a real economy. Think about moral hazard, whether it reduces or not moral hazard. And sometimes it seems to me that we are always behind economic theory. And think about it. Do not too much haste regarding the regulation. And before I provide you with my emails, because if I don't have so much time for discussions, you can send me an email if you want. I'm pretty sure that the regulation will never be final. Why? Because we can say, well, we have just solved the latest financial crisis. We are happy we do have a new regulations, but we will always need new regulations after a new financial crisis. Why? Because we always just, it seems to me, mimic the first best solution. We will never solve we will never avoid a new financial crisis. And what's my personal goal? Well, it seems to me, don't aim at perfect regulation because it doesn't exist. It's something as a snowball, by the way. But try to do our best to try to have the banking sector really robust, I would say, stable, and supporting a real economy. And why? Because I said, the perfect regulation doesn't exist, and it holds for both countries. I mean, for the Chinese financial market as well as for the Czech financial market. I'm very happy that I got opportunity to present the results, and I'm very pleased to have discussion with you. Thank you.
Thank you, Mr. Tomšík, very much for presenting the complex overview of the impacts by Basel III and associated regulations to local markets. The regulators, they are always well equipped to fight the last wars, not the wars which are to come. Touching upon the issue of complexity, this is something that at the end of the day the commercial bankers are to tackle, while single piece of legislation or regulation they might be fine, while then interaction of a couple of those or dozens of those regulations like this one or the other one, this one being new European legislation on the deposit protection schemes. This one is a capital requirements regulation. So at the end of the day, what is the practical solution of bankers?
Thank you very much. So, ladies and gentlemen, good evening. I'm very honored to be able to give my speech tonight. Well, frankly, I have to say that I'm not conflicted, or probably partly yes, because I'm coming from the world of WTO, and the biggest mankind document in the history was signed in Geneva or in Marrakesh, consisting of 26,000 pages. So it means, of course, what we are speaking about is something already seen or déjà vu. I think it's so. My first very solemn key statement is that, and observation is that we are not at war with the regulator, especially not with the regulator which is just across the building. Welcome, Mr. Tomšík. What is important is, we can say that we are all mobilizing our troops. And we are doing so for a simple reason, because we are facing challenge which is extremely big, which is evolutionary, which cannot stop, but which probably could be mastered a little bit more. Well, what are the challenges we are facing? And I'll be very, let's say, basic in it. And the first one is that when 3-4 years ago, this, what I call the tsunami of regulation started, so it was just innocent one. And unfortunately now, sometimes we are confronted with something like a global regulatory mess. We face too many issues of regulations, and here it is not accidental that I am putting some examples from the United States, which is first of all the fact that symptomatically it will then go across the whole world, and this is something which unifies both, it means China and emerging countries or Europe. So you see that it's something which is a real mess. Sorry, but it is so. Then too many pages of regulation without limits for details. Again, I think when I remember when I started in WTO, so the first documents, of course it was not 46, but the first documents in 46 comprised 2-3 pages, golden type of document, not many words. Now, if you look at, for example, the famous Dodd-Frank Act, so imagine that one page of Dodd-Frank produces or generates 10 pages of regulations. Who can really swallow it? Who can, it's fine to process, but who can read it? So visibly there is something like a clash. And too many regulatory overlaps. Again, let's look at something which comes from the overseas. If you look at Dodd-Frank and all those things, I think it's like a GPS to go through. The other one is extraterritoriality. It started, of course, at zero ground in 2001. But on the other hand, it's true that it continues with Dodd-Frank, FATCA, and with others. And my thinking is whether finally we will not continue with GATCA. It means global one. Let's imagine that we have transatlantic new free trade zone agreements, first with Canada, which is already practically ratified or being ratified, and now we will have the same with the United States. And again, if you look at FATCA, so there is one important distortion. I'm a free trade man, and there is one bigger distortion. Once you start with extraterritoriality of national legislation, it distorts trade. And one, for example, of side effects, which starts to be the case, is that some even bigger players start to think in terms that they will not render services to the US citizens. It's so, c'est la vie. Well, another, I think, concern is never-ending prolongation and staging. Again, I am in full agreement with Mr. Tomczyk on the fact that it is a never-ending story. On the other hand, it makes life in the banks rather difficult, because let's imagine that we have a project management process. We have to put all that in motion, and if you have, like in the case of Emir, so many changes and postponements, so how can we really cope with that in a reasonable sense? You see, starting June 2013, probably mid-2015, and probably inshallah, we'll see. Rising materialization of regulatory risk, it's something which is relatively new, or let's say it started to be a real case, let's say in 2009, roughly. And it is the fact that number of sanctions and volume of sanctions is increasing. By the way, as you will see, that's in one of the next slides, this is exponential curve. So visibly the fines are materialized. They are really starting to make a threat to the financials of the bank. And here you have also a certain unpredictability seen. You do not know exactly what is the scope and the percentage, for example, measured against the profit. Sorry, it is in French, but I think that the names are clear. And there is one which is now in red, which became a reality, 9 billion of US dollars fine, which is, it's quite material. Well, what impact do we expect? So the first negative influence on profitability of the banking business, higher costs and less future business opportunities to make money. Let's be frank. Once there is a burden which increases, so then the margin of maneuver, the maneuver space starts to be a little bit shrinking. The gap between regulated entities and shadow banking. I think that all of us, all previous speakers spoke about the fact that shadow banking is an issue. The negative impact is perceived in various areas: capital, project cost, financial burden of potential sanction, fines. So this is probably the only very specific, let's say, slide which I put into my presentation, which shows one thing. It's true that our sector is, I think, in a very solid form. We have, for example, in KB capital adequacy 16.2, including all the buffers, we are on 13.9, so there is still certain maneuver space. But the question is how the shareholders will react, because it means that, of course, they have roughly said two ways. One is to be accustomed to the fact that there is less profitability and probably less risk, so it means they will be comfortable, or there will be a certain rise in pricing of the services in the future. Probably there are some other ways, or there is a combination. Well, what unresolved questions are we facing? Where are the limits for keeping sustainable profitability? It is not only measurable in 1, 2, or 3 years, but let's say in a longer run. Which of course is very much related to economic growth, unemployment, capital fixed investment, etc. Then the other one, is there any danger that the gap between the regulatory efforts and the development of business will further increase? Well, where is the real entrepreneurial life? I will show you one example, I think, which is worth seeing. So, very, very future-looking one, big data, or let's say, business intelligence, or whatever expression you can use. So if you look at materially on the data coming from 2012 from the United States, it is 156 billion in revenue. And in the case of the European Union, it can be, according to BCG, something like 330 billion by the end of this decade. And in my opinion, this becomes for the companies which are efficient a very genuine comparative advantage for the years to come. Also, oh yes, that is the problem of right to erasure. Sometimes the customers can use it, but you will see that it's not probably such a difficult one. So the global regulator standpoint remains still unclear. I understand again that this is a complex issue. But if we take into account that the European Commission started with general data protection regulation, it means integrated one, in 2012, and there were more than 4,000 amendments. So it means that it will be very difficult, and where do we go? 2015, 16, etc. At the same time, and this is my personal experience from the World Trade Organization, that we, for example, negotiated on the Uruguay round of multilateral trade negotiations for 8 or 9 years, and in the same time, business was going 2 times quicker. So visibly there is a problem. And you see that also in Europe, this will have strong extraterritorial impacts because this will also be outside EU with the processing of data impact. Also, the definition is very broad, even IP addresses. Imagine everything which concerns information. Fines could be seen as or expected as very high. So finally, probably the real world is somewhere else. And now, just about the perception, how the world is perceiving, how it is going ahead. If you look at the different types of entities, banks, health insurances, public agencies, social networking sites, mobile phone operators, up to car manufacturers, the perception of people that who works with the information and he's allowed to do so, so the banks are on the best footing because, okay, everybody thinks, yes, bank works with data. And there is even a quite interesting social phenomenon, that so-called quantified self phenomenon, that young people start to get information on themselves and they are trying to trade them. Okay, guys, I will give you all information on myself, give me 20% discount. And it starts to be a special secondary trade or something like that. And another one, which sees that also psychology of people is changing. In the first 82% pillar, you see, or graph, you see that if people speak about a about protection against the hackers, of, let's say, integrity, information integrity, etc. They have no problem with that, 82%. Of course, they are far more reluctant to be against when it is about advertising, about some social networks, etc. So, what do we need to return the banking sector to steady profitability? So it means to combine all the efforts of big global regulator and local ones. To return to common sense in both governance and risk management areas. Of course, the bank, and especially the sector here, I think we are very risk cautious, so we do not make stupid things, and I think this probably will, after the crisis, be more seen than in the past. To return to common sense in regulation, it means by making more precise distinction between those who are troublemakers and those who are not, to combat free riding. Free riding is a very bad problem also in international trade. And also to be able to push the lawmakers and regulators not to have too many new silos. You remember I saw there was this GPS roadmap of different areas which overlap. And again, a second solemn statement, we accept the need for regulation, but we question the reasonableness, the scope, and the way in which it is currently enforced. And with due respect, sometimes I like exaggerate and to be a little bit provocative. Thank you very much.
Thank you, Mr. Polečka, for providing us the commercial banker view. Definitely, the issue of complexity of regulation and issues, how to tackle those and implement in practice are very, very challenging. Sometimes, as you rightly mentioned, the issue might be more focusing, or regulators should more focus on free riders than imposing the under the motto of level playing field, the burden on all the market. So passing on to payment services and regulations and associated issues.
Thank you very much. Good evening once again, ladies and gentlemen. Having the pleasure of being the last, I hope to be also the fastest. So I see in some of your faces questions, so hopefully that's going to be following after the short presentation. I will not surprisingly talk about regulation, but I will actually focus on the angle that actually concerns all of us, that concerns consumer impact mainly. And before I do so, I will explain a little bit where we are in terms of innovation and in fact what MasterCard does, because what we do try to capture this 85% share, and that's the share of cash in consumer expenditures today. And we believe that cash is bad, cash is dirty, cash is hindering economic development, and that's why we do fight against that. So that's today the cash, and that's hopefully going to be electronic payments in the future. And how we do it, we establish the so-called four-party model. We do connect with our more than 2 billion cards in the world. We do connect about 30,000 financial institutions that are here, and they actually facilitate the payment flow between these 2 billion cards and about more than 30 million merchant locations. We are in the middle. In fact, we are a technological company. We are not a financial institutions, but we are a technological company. And one more thing that actually helps us to fight against cash is not only the plastic that you see there, but the fact that this plastic is actually evolving into something that you all have in your pockets. It's actually evolving into the mobile. It doesn't necessarily mean that we will get rid of plastic tomorrow or next year, because as you get used to from, for example, newspapers, you read today newspapers in paper as you used to maybe last century. You read it on a mobile phone, you read it on a tablet, you read it on your web, on your PC. So it doesn't necessarily mean we'll have to replace every time the X device, but you will have more and more possibilities. What is also very important to mention is that the speed of innovation is actually really changing, and it's faster and faster. So what you see behind me is actually how fast it took to deploy the contactless technology, the tap and go payment. Instead of like putting your card in the reader, you just do the contactless transaction by waving at a terminal, and it took much shorter. If you look, for example, at the US, the migration from the magnetic stripe to the chip has not yet been finished. In fact, it has not yet been started. It took Europe something like 10 years to get to the chip migration, to something that is much more secure and consumer friendly. And it has taken actually just about a couple years in most of the countries, Czech Republic proudly being the fastest market to implement contactless payments. So it's actually taking just a couple years to implement new technologies. Now, obviously, it's not just about the fact that the infrastructure is different. What is extremely important to mention, and I would just build up on something that Mr. Tomčík mentioned, this is the true financial innovation, because the new technologies do actually open the spaces where we are not today. So while you can pay with MasterCard in merchants, you always used to wear your wallet, now you can use your gadgets, stickers, keyrings, but actually it opens space to transit and public sector. Just imagine London, where you today take your contactless card instead of buying the paper ticket, for example. You just tap and go inside a bus. So transit, mobile phones, obviously, new applications in e-commerce and commerce, and new applications in retail, which all together will actually converge in the new ecosystem. It's no longer going to be about where you bank. It's no longer be about which plastic you have. It's going to be around yourself and how you live. You'll have your payment as something that is a matter of course, something you don't think about, just like you take your phone today when you need to browse internet. So that's going to be the future. Now, again, innovation is something obviously that consumers want. If you look at a chart behind me, it shows that more than half of people would actually welcome to pay by phone instead of paying by card. If you also take into account the indifferent, it's about 3/4 of people who actually do want to change, who want to innovate. And for them, we have the new solutions. We have mobile as a card, convergence of online, offline, mobile as a terminal. Why would you need a heavy, expensive device when you actually have all the connectivity in your pocket today, in your mobile phone? And last but not least, there's a new emergence of the mobile wallets that actually create new interfaces to how you think about banking services. Now, all that means that you will not think of payment as something that you have necessarily as an old financial infrastructure, something you have to have in your wallet, but something that, for example, like in Yankee Stadium, here you have an example from Yankee Stadium, you just basically scan your seat in front of you and you'll pay and the order will be delivered instead of huge queues during the break back there in New York. So this all actually enables not only financial innovation, this doesn't only enable financial inclusion, because it means you can also do peer-to-peer payments. Not only you can actually better fight shadow banking, for example. Financial innovation actually improves the lives, and actually by fighting cash also improves economic prosperity. So that's about financial innovation. Consumers want that. And now, obviously no innovation comes for free. The banks are under the profit pressures. And who would actually invest into the contactless deployment if you don't have money in the system? So that's why there's a little financing mechanism in the system. So not only we actually do process information among the parties, but there's also the interchange. So interchange is something that, for example, KB, who is issuing the card, gets by you making a transaction at the merchant. And it's fair, because the merchant actually gets a service, guaranteed payment. You typically have much bigger turnover than if you have only cash, especially if you're traveling abroad. So it's fair. Merchants are paying for electricity, security guards, so why they shouldn't pay for payment when it's actually something that helps them improve doing their business. So that's fair. In fact, this interchange and the merchant fee related to that is in most of the countries in Europe cheaper than the cost of cash, which is quite surprising because cost of cash is not only what Mr. Tomčík has to pay to the printer of the banknotes, it's also the cost of counting the money. I think, you know, about cost of cash, if you listen to KB, you suddenly boost the cost because you need to count the money, you need to you know, fiddle around with them, you need to have the security guards, etc., etc. But last but not least, you have also shadow and gray economy that boost the social cost of cash. So in fact, this cost is obviously in most of the cases cheaper than cash, and that's actually why we are getting to regulation, because EU thinks that this cost is too high. You know, what is too high? I mean, hard to say. In fact, EU has difficulties to say that, and now I'm really getting to troubles with regulation. Obviously, it may be beautiful if a merchant comes to you and tell them, look, if you, dear European Commission, decrease regulation, then I'm going to also decrease the prices, so everybody will be happier because our retail goods will be cheaper. In fact, none of the countries that already regulated interchange has seen this effect. But what has been proven is that by reducing interchange, obviously the cost of payment doesn't disappear on the banking side, just like banks today have to pay for handling cash. And in fact, the regulation that is not well thought through actually has unintended effects on consumers, because by reducing the profit of the bank has to actually price up some of the services. So this is the effect that we see in Spain, in US, in Australia, recently in Poland. All the countries who tried regulated interchange actually ended up with much more expensive services for consumers. Not only that, obviously, you actually then hinder the innovation of the system, because if you don't have money to fund the innovation, why would you innovate? Why would you invest into something that doesn't generate profit for you? So in fact, it's again a beautiful idea. You know, we'll just kill this interchange because it's a high cost. But eventually, the secondary and tertiary effects are something that are extremely difficult to capture, empirically exposed, but also in effect. So this is one of the examples where actually, you know, claiming consumers will have cheaper goods will in fact make consumers suffer from more expensive banking services and less innovation. Unfortunately, actually, it seems that the regulation will go through, despite there are many organizations, consumer organization, obviously MasterCard, banks, etc., etc. It's extremely difficult to explain to a regular member of European Parliament, to a regular politician, what the effects of financial regulation is. And I think that's a common problem of all of us here, because it is, let's say, a slightly sophisticated topic that requires some background. So despite all these negative effects, it seems the regulation will go through, despite the fact that actually EU has not yet justified why they set levels that they plan to set. And in fact, we are actually suing European Commission because we believe if they set some information based on some study, they need to reveal the study. But unfortunately, this regulation means just for the 5 biggest markets in Europe, the total loss of almost €2 billion. And once again, as I explained, and as this infographics shows, the Spanish impact, for example, was that this whole loss was paid by consumer. And in fact, I will get to the beginning. Fighting cash, obviously we have technology to fight cash, we have our banking partners to fight cash, and in fact, while we actually see some irrationalities on one side, we do actually cooperate with governments to work on how to, let's say, engage more electronic payments. Doesn't necessarily have to be MasterCard cards. It's electronic payments in general. Why? Because if you have, the more cash you have, the more shadow economy. So by reducing cash, what the chart shows behind me, you can actually reduce shadow economy. Or if you actually reduce cash, you actually also have higher revenues of government. And that's what I would conclude with. You know, there are bad regulations, but there can be also good practices. So there are various countries from Asia to the US and Latin America that actually did use some regulatory measures to foster electronic payments. Again, doesn't have to be cards, electronic payments in general. And what we have seen is that those measures that are, let's say, less restrictive, such as cashiers, the more restrictive they are, such as, for example, fiscal registers, etc., the less effective they are. But whenever you actually involve consumers, whenever you involve the right incentives of institutions such as banks, such as other parties in the system, the more effective the regulation is. Again, as I said, fiscal register may be an example of less effective regulation because everybody just throws away the receipt or doesn't ask for it. An effective regulation is the one that was applied, for example, in South Korea or Argentina, where consumers actually get a tax discount if paying by electronic means of payments. And that is obviously a good motivation, good example why people should behave a certain way, and obviously also a good way to motivate the institutions to accept cards. Looking forward to your questions.
Thank you very much for the presentation. I believe following the extensive discussion of the regulation and its intended or unintended consequences, this might lead to a couple of questions. I would start the discussion part of the of this event with a question. As was mentioned by Mr. Tomšík in his presentation, that we need sort of a appropriate, better targeted regulation. Could you panelists comment also and share your views with us on this? How such better, appropriate regulation might look like? More detailed rules, more focused enforcement? What are the right incentives to be implemented? Or are there currently right incentives implemented in the regulation? What are your views? Probably Mr. Tomšík could start.
Thank you very much for the question. So it's not easy to say what is exactly the better regulation, but it seems to me, as I clearly said, well, I think no one will be really able to prepare perfect regulation. And you see that there is a huge development in whole business, and the same holds for the banking industry. So it seems to me, even if you say that now I'm happy with the regulation, it's just right now, because tomorrow there will be new business, there will be new financial crisis, and we'll have to work new regulation. So back to your question, it seems to me probably we should give up, the idea to prepare a really complete, perfect regulation, and just to come back to the basics, like to prepare basic principles. And it's going to be very, I would say, just stay with the basic principles. By the way, Basel core principles, how many Basel core principles we do have? 29 Basel principles. And as I'm talking to some bankers, sometimes they know just about, capital principles. They don't know the others. I'm saying that because if we stay with the quite broad Basel principles, and each commercial bank, each credit unions will apply them, in their corporate, I think this is the best idea, because each bank, each credit union, each unit has a little bit different business model. And don't make sure, I'm pretty sure that we will never be, as a regulator, at the same time supervisor will be ready to prepare perfect regulation for all business units in the financial market, especially once we do have one common regulation for the whole European Union. Yeah. So just stay with the basics, stay with the principles, and try to, I would say, elaborate on these principles case by case.
Good, Mr. Sham.
I think the best term is one regulator and one banker. So it's the turn of the banker. Yes? Peter?
Thank you very much. So something comes to my mind. So I'm fully in agreement on the fact that there should be principles first set up, for a simple reason, because it is a kind of a hectic spiral. I may tell you that when I was in Geneva, I was covering 49 different areas of trade. And my personal experience was that the most controversial were the parts in which there were too many details, too many disputes, agriculture, phytosanitary measures, etc. And what is important is that it is to be decided on the merits of the case, probably to invest more time into clarification of the semantics of what the main principles are. And sometimes then it's necessary to go into some details, but not at any price. And visibly, what I try to show is that somebody just became foolish. It's not ergonomic. It's not something which can be digested. Even imagine that in the bank, we are quite a big bank, compared, of course, the Chinese sector, it's not the case. But it means that there will be doubling, tripling of personnel to cover something which was... And then what is important is to listen more to the representatives of the sector. We had in Geneva a kind of talks, the trade negotiators with different various industries. Well, all the time it was shocking because we were quite lagging behind. But I think it's important, otherwise it will be a loss-loss situation. Thank you very much.
Thank you.
In fact, I would absolutely subscribe the criterion of basic principles. It's very simple to agree on basic principles. It's a guiding measure, so it's definitely, it should be more about principles than about details. Absolutely agree. And in fact, it's so easy to forget and give up on principles as you follow down the path, and you know, the things are becoming more complex. So definitely that's thing number one. Simple, short, basic. But at the same time, you know, these basic principles should represent some efforts that should be trackable. I mean, in many cases there are regulations where you just regulate and then you forget about it. You know, 5 years down the road, the regulation maybe doesn't make sense, but you still have reports, you still have this and that. So there should be a tracking mechanism that would, a KPI that would basically describe whether the regulation has been successful or not. Once again, if I look at the regulation of cards, nobody's actually showing when we'll be successful or not. We're just reducing, but we don't actually, the regulator actually lost track why this should be. And last but not least, as I said at the last slide of the presentation, they should motivate behavior as a preferred way to restrict some behavior. So for example, I can imagine a situation where you would decrease some profits by, for example, let's say stringent capital requirements or by reducing the interchange. But at the same time, there are always ways how to promote certain profit making. You know, all these businesses that are regulated are actually making profits. So for example, why can't I pay for my taxes with card? Why can't I pay with a wire transfer when I pay municipal fees, etc., etc. So if I actually reduce the profit on one side to the bank, I need to actually give opportunities to earn money on the other side, and there are always some opportunities to make more money. If not, then obviously the banks, other stakeholders will always find a way how to make money, let's say, in the unintended space. So basic principles, KPIs and tracking mechanisms, and motivating rather than restricting.
Something came to my mind which is related to that. There is one real trap, very serious trap in any kind of this type of exercise. It's cross-referencing. Because if something is done too hastily, in spite of the fact that we are confronted with that we have to do so, the more you add, the more the problem is whether the documents inside the same constituencies or across the ocean are the same. So it means sometimes people, operators are lost because they do not know there should be a kind of vocabulary or manual to explain. And I remember we had drafting on this in Geneva for 10 years and more. I was present at the accession group of China to the World Trade Organization during 9 years. And I know how it was just one country and how many things we had to go through because of cross-referencing. So this is, I think, very important thing. And once you go too far, too inflated, you are lost.
Thank you very much for your comments. The complexity and incentives. How these two elements of the regulatory framework overall could be sort of coped with, and how the resilience of financial institutions in this, in the light of the discussion we just have had, could be enhanced. I'm not thinking only about banks, but also other financial institutions. We have seen several initiatives at different fora. What is your view? What are your views on proper incentives for financial institutions to enhance their resilience, to enhance their global loss-absorbing capacities? Supervisors probably to comment on.
So, Peter lists the fact that there are so much regulations. What's the reason? I would like to share a secret of the regulators. The reason of the production of such amount of regulation is the regulators hired too much lawyers. Maybe. So I think it's a joke, but the fact is, I think the regulators' intention to draft this amount of regulations are not to kill the banking and kill the bankers. Since I really know the fact that if there is no bankers, it's unnecessary for the regulators. So there are bankers, so we have a job. If there are no bankers, we will lose our job. So we know the intention to draft this regulation is to keep the market, have confidence of the financial sector. And it's a response of the former or the financial crisis in the 5 years ago, happened 5 years ago. So I think the regulators' response for the crisis is to enhance the regulation, to draft more rules and policies for the financial sector. But we still waiting for the, when we draft these regulations, we have a lot of correspondence with the markets, especially in China. I think different countries have different situation. In China's situation, we consult a lot of the bankers' opinion. And sometimes you cannot believe that we co-write the regulations with the bankers. Some bankers join the draft group of the regulations. So if that happens in Europe, I think you will not criticize the regulators so much. I'm not very sure the Europe situation, but in China, that's a fact.
Could I have a question or probably one remark on it towards regulators? First of all, I distinguish between regulator and regulator. This is the first thing. The other one is, what are we to regulate? Market or something else? Because the question is that it also, to some extent, changes the philosophy. what is behind. If I look at, for example, trade finance, doubling, tripling, quadrupling of the needs, what has to be done, it's more than a forensic audit, it's more than criminal investigation. So my question is that if we have to be, let's say, stick to realities, is to really be first very aware of what we want really to regulate. The other thing is that it is very much related to politicians. I don't want to say that only to them, but I worked with the politicians. I have never been politician, but I was negotiating the first association agreement with the communities in 1990. And it is a kind of a thinking in which you have a mandate and you are going, stubborn head. You do not see what the signals are coming from. So it means there is no correlation, there is no feedback. And it is, by the way, the problem of Eurozone. Even the Germans were in breach of Maastricht criteria. So it means there should be a kind of a dialogue all the time, because then you can go back to basics.
Well, I have to say that I'm really enjoying these discussions about the regulation, because on one hand I started it back to the basics, back to the principles. And I have to say I'm really in favor of what was just said regarding the self-regulation. It seems to me, just make it realistic. If we really focus too much on regulations, if we really believe that we can really prepare regulation in all details, we will fail. Because as I said, I mean, the real world continues. There is no end of real world. There is always new innovations. There will be new financial crises coming from somewhere else. And as was just said by Mr. Palečka, if you just focus on some details, you just focus on new regulations, you will be ignoring what's going in real life, in your real life. Forget about it. So I will be very, very happy to focus on principles and to believe that there is a self-regulations, because if there is no self-regulations in all units in the banking sector, how the units, how they can survive? There must be some I would say, self-regulation. And why we need some new regulations? Well, if we see if all these principles fails, or this new self-regulation fails, all right, let's sit to the table and let's agree in what kind of direction we should think about regulation. But definitely avoid the idea that we can regulate everything in more details. Definitely it will not help us to avoid future disputes. There will be always disputes. No way like that.
Yeah, thank you very much for your insightful comments. Definitely, history of financial markets is a history of scandals and crisis. Per says certain Nobel Prize winners has extensively proved. I think it's time to give floor to members of the auditorium for their questions.
Hello, my name is Michael Mejstřík, and I do appreciate the discussion about the regulation. Once in the past, I had written a book that even the regulation of the Basel I actually mislocated a number of assets, specifically in the Czech Republic. So I believe that this is always the problem. On the other side, I must say that as a chairman of International Chamber of Commerce, so there exist products which are based on bottom-up rules. So there is certain segment of the regulation which is actually generated for the banks, like letters of credit, bank guarantees, let's say forfeiting rules, and a number of the others, which are being generated by the business itself. And of course, it's not prevailing, but still we should not forget that point. And it helps to communicate those things all throughout the world. And I myself had been training Chinese bankers in October 2011 in that respect. And I do appreciate that this is not vertical type of regulation, but just purely horizontal. So that was my comment, but I would still like to use the opportunity to have here Mr. Chen Armstrong, and it was interesting to listen what is happening at the field of shadow banking, and there is another specific field of banking in China, which is actually, bad loans are being generated all around the world, and in Chinese there is a specific instrument at each of the large banks which are now generating the biggest profits worldwide, are also having their own consolidation banks, each by each. And what kind of regulation is, because they are basically asset managers and they are working on workouts and selling the receivables, and it's for me a kind of potential shadow banking as well. So are there any specific rules to cover this field of interest? Through regulation or whatever? Because usually you cannot find out any information on this segment of the market. But I have been training those guys, so I had the opportunity to speak to all of those.
That's correct that China banking sector very profitable. I think there is a report released recently that last year the whole financial sector of the world created 100 trillion US dollar profit, and the China banking sector account for 1/3 of that. So very high profitability in China, but we don't think this situation will continue, at least not so highly profitable in future, since more and more non-performing loans created, and the whole economic situation, I can say that at least the economic ratio is somewhat decrease comparing with the past 10 years for China. So there are some potential risks for the China banking sector, especially for the local government default, especially for the real estate market. So I can see the high profitability of the banking sector cannot continue in the coming few years. But that does not necessarily represent that the China banking sector will confront very seriously problems. As you see, the Chinese bankers are learning from other bankers, from other peers of the markets. They know how to diversify their risks. So you see, I think one good choice for them to do is diversify their business, not only in China, but also worldwide. So you could see some Chinese banks are very aggressive to develop their international business, to set up their subsidiaries, to set up their branches in US, in EU, in South America, in Africa. So I think there's one way to diversify their potential risks geographically. As you know, as the Chinese banks have no branches here yet, but I think since they already set up their offices in Poland, in Hungary, Czech Republic, or Prague must be their next stop. Thank you.
Thank you very much for question and response. It seems that there is a room for expansion of Chinese banking sector into Europe then. Good. Next question, please.
Thank you. And my question is that for the Czech National Bank, Mr. Vladimir, sorry my pronunciation, and you mentioned words, some banks are too big to fail. Actually, just like the JP Morgan Group in America and SCBC in China, and their assets are even larger than some small countries. And as a regulator, in your opinion, and do you think the supervisors should make more regulations to limit these super big banks, or just put influences to these super big banks and make them like an example of this industry, and other small banks follow them? What's your opinion?
Thank you very much for the questions. Look, if you limit, the size of the bank, definitely you limit the business. And well, Czech Republic already, in the past, all of us, we lived in a central plan economy, and well, the central plan economy was accompanied with the all limits, and finally, we saw this is not the way. So I'm fully support the business, and if some company wants to grow, let it grow, but clearly say there is no size to say too big to fail. It doesn't matter that you are too big, you can always fail, but we have to know how to mitigate, how to really face the consequences. Because we know, even this is the case for some Czech banks, if big bank fails, definitely it will significantly harm a real economy for a long period for the future. So we have to put in place a real recovery and resolution plan. What it means, if there is a problem, even if in a really big bank, we want to see, first of all, how stakeholders will put new capital. If it's not enough, how, I would say, junior as well as senior bonds will be transformed in a new capital. And so if it's not enough, okay, we need to have a real power to take all stakeholders and debtors out of the bank, to split it probably in several entities, say, well, you are the bad bank, just get rid of the bad bank, and use the good part of the banks, sell it to new investors, for example, yeah? So definitely, I know about the problem that some banks, the same holds, I wouldn't say for the Czech Republic, but for some European countries, they are really so big that if there is a problem, well, you need the whole national GDP to cover the losses. And once I look at the latest financial crisis in the European Union, there were several crises of European banks that at least 2 or 3 countries, they had to put together and provide the whole, I would say, not credit, but guarantee for the bank. But this is the past, this is the experience, what we got from the latest crisis. Now we are really hard working on recovery and resolution plans. It doesn't mean to limit banks in their size, but definitely means to know in advance if you are growing too fast, make sure you do have enough capital. If not capital, make sure that you can lose your stakeholders, you can lose your, influence in the bank immediately if there is something wrong. Yeah, but definitely no limits.
Thank you for detailed response. Given the time constraint we face, we'd call for last 2 questions.
Yeah, the back. I do encourage more questions especially from the students of the summer school. More questions will make more possibilities for you to get the internships possibilities, especially from the KB, MasterCard from the regulators, you see.
You also might have, will have opportunity to ask questions and discuss with the members of the panel in the course of the reception afterwards.
Well, maybe I'd like to follow up on our colleague's question. As Mr. Tomšik has explained, I think there is a big interest to have a credible commitment of the state not to save the banks, which we now call too big to fail. And I'd like to ask maybe regulators, but also maybe market, if they think that right now the rules that have been approved, let's say in European Union, let's say the banking union, the single resolution mechanism, and also Dodd-Frank in USA, if they feel or if they believe this is a real and credible commitment of the state not to save big banks, or if it's not that credible and big banks can still rely that in case of trouble they will be saved by taxpayers' money or some other distribution instead of from shareholders or creditors.
I just wanted to say that I don't want to, answer the first one because I've thought myself that I should leave some room for the others, but probably let me start with answering these questions. Well, you mentioned a single resolution mechanism. Just make clear that single resolution mechanism is something what is, valid just for single supervisory mechanism for the banking union. What is more important, it's Banking Recovery and Resolution Directive, because this BRRD is going to be applied to all 28 European countries. And for just for my Chinese colleague, what it really means, it means that the European agreed to implement something as a new template, how all banks, I'm saying all banks, not only big banks, but all banks should be treated in case if there is a problem regarding the resolutions and recovery, because, well, no one wants to put public money in the banks anymore. Nobody wants to bail out anymore. And regarding the Banking Recovery and Resolution Directive, definitely, it seems to me it's something as a game changer. It's absolutely new one. And I just described it in my previous answer to the questions that now it's clearly said that no one, I can't rule it out that, of course, if there is some problem, we can always put some public money on that. No, you never know. You can't rule it out. But now we don't say it in advance. We just clearly say, if there is a problem, be ready to use all capital buffers. That's why we are working on higher capital and better capital. Be ready to put more capital as a stakeholder, or you are going to lose, all equity. Be ready to transfer junior and senior bonds in a capital, and be ready to really, I would say, trigger recovery and resolution plans to split the company, and just probably to sell it immediately. It's absolutely new. It has, the European Union has never ever agreed on that, and definitely it's a step forward. I believe in this.
Bail out is replaced by bailed in.
Fortunately, not in Czech Republic yet. No, we have to work on it. That was just agreed on the European Union. Honestly, yeah, we don't have a bail-in. Honestly, not yet.
Thank you. So you were quicker than me. I wanted to mention exactly the bail-in as one of the fully uncharted terrains. By the way, there are some quite interesting questions out of it. Imagine that there will be a big bail-in, and it will then probably be repeated in the future. So visibly, at a certain moment, shareholders, creditors, politicians will start to say, well, you, the regulator, tell us in advance that this institution is in troubles, etc. So this is quite interesting, let's say, new era, new terrain where really I think there is no experience at present. And the other one is, and this is very much applicable also to the Czech Republic, and probably to some other countries, is if you are any kind of a guarantee mechanism in which you have to put your money, so you should do it without having a threat that some free riders who do not have the same footing, the same, let's say, risk management culture, that they are, let's say, suffering or they are doing something which is moral hazard, they finally are beneficiaries of this. And for example, I just found let's say, in the Czech Banking Association paper that, let's say, the quarterly contributions to the Bank Resolution Fund would be something like almost 3 billion of Czech crowns. Yeah. So visibly, it's not a small portion. So I think there are very many outstanding issues which are still ahead of us.
Probably one sentence to elaborate on it. I fully agree, it's not little money, what you said, it's not. But on the other hand, we have to really say, even if it's not little money, it will never ever be enough to save the banking sector. This is something what we have to clearly say to the public. People, they believe that when all deposits are completely guaranteed by the Depository Guarantee Fund. This is not true. Right now there are like 30 billion Czech crowns. And look at the total assets is less than 1%. The same holds for single resolution fund. Even if it's, I mean, it's not little money, it will be again only 1% of total covered deposits. So come on, it's not really, don't rely on these funds. Never rely on bail-in and on principles and on trust and good behavior.
But one cannot, of course, exclude the possibility that this will be such a big turmoil and such a big disaster that there should be a kind of what I call a crisis management mechanism. It means, of course, I know that since we are committed by various international commitments or agreements on subsidies, we cannot put it automatically into a kind of an amount that this is to be done in the case of a guarantee by the state. But what I think is possible to do is to prepare a kind of a road plan, to know that if there is a red button pushed, who knows what to do? Because if you take into account how it will be speeded up, 7 days, etc., and there is no mean. So at least there should be a kind of a mechanism, which does not mean that this will be the first per se. There are other possibilities, or it will be in combination.
Maybe just a little thing to add is also the, again, educational perspective, because as Mr. Tomčík mentioned as well, labeling somebody too big to fail means actually labeling them as a safe, and as Mr. Polečka explained, people won't actually, or institutions won't save banks, so this is actually free marketing, if you wish. And I think what needs to be told is too big to fail doesn't mean you actually get all your money back immediately, you know. It means that there is a certain consequences of actions. It means you actually lose part of your money. You'll survive, but actually there will be significant loss. So don't think state is here to guarantee everything. So in general, I think there is also some education needed about what these consequences mean for individuals, for companies, for public.
To solve the too big to fail problems or phenomenon, in China, we are preparing the banking insolvency regulation and the deposit insurance scheme. So as well as we also push the GCFIs in China. As you know, in China we have 2 GCFIs. One is Bank of China, another is ICBC, to push them to prepare the living wills, as well as the recovery and the resolution plans. So that's our response to the too big to fail problems. But as I said, the bankers are always, the regulators are always hesitant to kill the banks since we are afraid to lose our job. You see, it's selfish maybe. To resolve these problems, I think there is another very effective instrument, that is antitrust law. In China, the antitrust law enforcement ministry is Ministry of commerce, like Mr. Jia worked for. We have antitrust law, which enacted 7 years ago, but it seems that it has not focus on the banking sector yet. But I think in future, the antitrust law in China is going to think about the too big to fail problems. For example, maybe through the detailed regulations on implementing this law, maybe there are some articles require the big banks to sell their business. For example, if their market share is extra 10% of the market, they must sell them, or they must decrease their business. Other too big, other instrument to resolve this problem is the consumer protection law in China. In China, the consumer protection law is enforced by another ministry, not only our commission. So if the big banks create some serious problems, especially on the consumer protection, I think that ministry or that consumer protection law will also show its power in future in China. Thank you.
Thank you very much for extensive response to the question. Last question. Okay, on that right side. Behind.
I want to ask dear professors about we heard about the scandal of the manipulation of LIBOR several months ago. So how can we just regulate the behavior of these banks, of these commercial banks, and how can we just balance the law, the EU law and the national law? As you can see, mostly the interest rate are just controlled by the banks, and the government can't just do something about that. So I think the regulation is the most significant. And especially, should we just set up a crime type of this behavior? And that's it. Thank you.
It's probably for Mr. Tomšík.
Yeah, I think I'm always ready to answer. All right, look, I'm still very positive regarding some basic principles. Definitely, if you think that you can prepare detailed regulation, even for LIBOR or PRIBOR in case of Prague, are you really sure that you can prepare regulation to avoid cheating and some crime behavior? I think you can't. Never, never. Even if you have really detailed regulations, well, if someone of some unit, some bank, wants to cheat, or just, use something as a crime behavior, all right, well, you can't avoid it. What you need to do at that time, you need to have a perfect offside regulation and offside supervision. What it means that you need to prepare something as automatic data selections and automatic links and collect data from regulated subjects on time, every day, etc., to identify why some banks providing probably something as a leverage point, something as a leverage, I would say, data regarding LIBOR, PRIBOR. And if you see some, I would say, yellow signal or red signal, you need to go to these institutions on on-site inspections immediately and look if there is a cheating or crime behavior. But it's about people, and even if you have perfect, legal environment or regulation, and if someone wants to cheat, you have to be ready to look at him, look at it, but don't think that with more regulation you will avoid it. Never.
Even best draft of rules will not be sufficient per se. Also, the tools for spotting the free riders, as Mr. Polečka has mentioned, these are the crucial ones. To conclude our discussion, which will of course continue in the course of the reception, I would think that the general underlying, or would you like to comment? Sure.
And waiting. Another question, I think is.
It's very difficult for those micro and small enterprises to get loan from the bank because their capacity of making profit is unsure in the future. So there is a dilemma that you don't let lend loan to them, so they can survive, and the economy is going to be affected, and you don't have enough deposits from those enterprises. How do you figure out this dilemma?
What we try to do is to facilitate the payment flows, actually, because very often if you actually don't, all the entrepreneurs actually they have to do business that is profitable, obviously, and sometimes the problem is that they are not getting paid on time. So what we have is a certain set of instruments where we actually do provide them with easy payments, actually, or in cooperation with bank, with microcredit facilities, with credit cards, etc. So there's always a solution, but like in the past, it was very difficult to channel the money to the right companies, to the right individuals. I think now with the new technologies, it's much easier for them to have access to funding, to have access to cash, if that answers your question. So what we have, what we see in many countries, including China, including India, we see a boom of prepaid card, for example, because let's say an easier access to cash, easier access to financial infrastructure. The financial literacy is by that fact improving, and what we see also is growing level of acceptance of electronic payments. And it's not only actually in MasterCard. We see other examples, such as, for example, Kenya with the famous M-Pesa, etc. So the technology can make a great deal of help here.
Thank you. Thank you.
I don't think this kind of phenomenon happens in China today. If you know some consumer loan companies or some P2P companies in China, for example, there is a very famous company from Czech Republic, PPF. Yes, they have a home credit in China, a very large network. And I think this kind of company could resolve the phenomenon that a local person cannot get the loan, especially for the students, you see. So I think in the past few years, this kind of the situation in China that has changed a lot since the regulators issue a lot of licenses to the consumer loan or microfinance companies. So I think 10 years ago, it's very hard to get a loan, you see, from the banks. But today, there are many companies will minimize the gap between the market and the local presence in China.
Thank you.
Thank you very much for responses. I'm sorry the time constraint and the time for this the panel session is already over. Unfortunately, we can keep going in discussion for hours or days, I believe, and at least some room for questions and discussion will be in the course of the reception. So let me conclude on the panel by two comments. There are definitely similar issues in various or most jurisdictions globally, and the regulatory standards in this globalized, interconnected world are really global ones. However, still there needs to be a room for adjustment, for a discretion at the national level to focus or to enable adjusting the regulation to the conditions, the specifics of the market, given the complexity of the regulation, the way how it is prepared and implemented in practice does really matter. Involvement of financial institutions, not only banks, in drafting regulation and application of the bottom-up approach might help a bit. Thank you very much, all the members of the panel. Thank you very much, the auditorium, and thank you very much, Komerční banka and organizers of this event, to have us such an interesting, extensive discussion. So, and now move on to the best part of the evening, the reception.